Hello and welcome. My name is Matthew Lemieux. I'm a research analyst with Lipper, and today I'm joined by Stan Major of Hotchkis Wiley, Portfolio Manager. How are you doing today, Stan?
Great, Matt.
Today we're really highlighting winners for 2012 Lipper Fund Award winners. And Hotchkis and Wiley has had a great honor. They are actually named the best small equity fund company for 2011's performance period. Congratulations.
Thank you very much.
So Stan, Hotchkis and Wiley, this is the second consecutive year that you've been named best small equity company. You know, really, what sets you apart from the rest?
I think there's three differentiating factors that differentiates Hotchkis and Wiley from other managers. One is we maintain a consistent philosophy throughout time. So it doesn't matter whether you're a value manager or a growth manager, but what does matter is that you're consistent through time. Sometimes value will be doing well, sometimes it won't. But what we make sure is we always stick to the same philosophy, because if you decide to change philosophies, you'll probably do it at the wrong time. So we keep very consistent in terms of our philosophy. We also keep a consistent staff. So one of the issues that a lot of financial services firms, a lot of asset managers face is there's a big turnover of employees. We have very low turnover of employees at Hotchkis and Wiley, which means that the employees that have been there for a very long period of time.
So it's also well known that you guys are bottom-up investors. You know, really, what do you see the benefit in that type of strategy?
There's two different types of investors: bottom-up investors and top-down investors. Top-down, they look for themes. Bottom-up, we don't look for themes. We look for very good valuations at specific companies. The issue that we run into when we look from the top down is that by the time you've figured out what a theme is, it's already a little too late. So it's already reflected in the valuations. What we find by doing things from the bottom up is we can take that timing out of the equation. A lot of times we don't know exactly when our stocks will go up in price, but we know with reasonable confidence that they can go up. So what we're trying to do is isolate the highest quality companies, the best valuation, and figure that nobody's really going to get the timing right. There's really no magic way of doing it, so we really don't spend as much time focusing on that. We do analyze the top down from a risk perspective, but we're not trying to isolate themes. We think we're better at isolating valuation and taking advantage of that.
It's a very consistent way to do it. So also, you are the portfolio manager for Hotchkis and Wiley's mid-cap value strategy,
yes,
which has really outperformed a lot so far this year, 2012. Do you really see that there's still some people looking at the equities in the market? There's still some room to run. You know, what are your thoughts on that?
We think the best indication of performance is valuation. So a lot of investors will look at performance and say, well, things have been good, they're going to be good in the future, or things have been good, they have to be bad in the future. Those tend to not to be as reliable as looking at valuation. So if you look at valuation, that gives you a better indication of what the markets look like. From our standpoint, we see a lot of attractive opportunities. The nice thing about being a manager like ourselves, we limit the assets under management in each of our products, so we can take advantage of the full breadth of the market. So there are a lot of opportunities out there that are either not well followed or a little bit off the beaten path, where we can invest in opportunities that are significantly priced with lower risk, better than the market.
So it's really the valuations that are important for you.
Exactly.
So coming off of 2011, we saw a lot of volatility in the market, even though it's been a little bit quiet so far this year. I mean, do you see volatility coming back in the market? How do you really adjust your portfolio when you see volatility or when it's really not there anymore?
Volatility is a tough thing to figure out because it's very hard to predict. So we know when it's there and we know when it's gone, but we don't know when it's coming. So when you look at periods of very high volatility, people become very nervous that volatility will increase or stay at very heightened levels for a long period of time. Generally, after heightened periods of volatility, volatility decreases as people become more comfortable with the environment, whether it's good or bad. So we would expect that after a period of high volatility, there's a reasonable chance that volatility will be reduced. We're not certain that that's going to happen, and the way we position the portfolio is, given that there is so much uncertainty around it, to position for any type of environment. So if the market is very volatile, we can take advantage of it by selling stocks that have gone up a lot and buying things that have gone down a lot. Or if things are not very valuable, we can research new ideas that benefit in a low volatility environment.
Right, so it's really about positioning yourself and being aware of what's going on in the market.
Being prepared for whatever the market gives you.
Right, so if I'm an investor, I mean, what type of investor, you know, is really right for Hotchkis and Wiley if someone's looking at your company?
The best type of investor to invest with Hotchkis and Wiley is somebody that really understands what we do. So if you understand that we're a value investor, we're not going to outperform in all markets, that's what we're looking for. Too often investors look at historic performance and then decide to invest. If they're looking at Hotchkis and Wiley, they should really understand what we're doing. Looking for stocks that are out of favor, looking for stocks that are undiscovered, really kind of zigging when the market's zagging, in a lot of cases somewhat contrarian in nature. If that's what an investor is looking for and they understand that we're not going to outperform in all markets, I think that's the type of investor that should look at Hotchkis and Wiley.
Well, once again, on behalf of Lipper, I'd really like to congratulate you on your award. And for us, that's it. Bye-bye.